Thank you so much. That's where all the markets are focused, the price of oil. Let's do other Fox News alerts that we have right now. Take a look at markets reacting to higher oil prices and, of course, yesterday's Federal Reserve meeting, basically signaling maybe higher rates for longer. As you can see, major averages are lower by about 0.2%, led by the Dow and big tech. NASDAQ down 0.3% on the day. Now, traders are pricing in about 0 rate cuts now for 2026. This is as policymakers are concerned about inflation impacts from the Middle East conflict. Two-year yields earlier were as high as 10 basis points on the day. Now we've settled in. We're only higher by about 4 basis points on the day. It was a similar story with 10-year yields jumping this morning, finally settling out and about unchanged on the day after a big jump earlier. Meanwhile, higher yields, what does that do, right? Typically that pushes gold down. That's exactly what you're seeing. Gold no longer that $5,000. It is down 5% on the day. Other commodities falling similarly in tandem. Silver, copper, you've silver down 7%, copper down 1 to 2%. Again, is this signs of a demand shock if there is sort of a slowdown or even a recession on the horizon? Let's go to some individual stocks that are moving right now. Take a look at Micron Technologies. You're down 3% on the day and heading lower despite blowout earnings and strong guidance. This is as the memory chip maker expects CapEx to be $25 billion this year, spending more than what analysts had originally wanted. Let's do all of this with our floor show guest. Joining me now, I'm pleased to say, B. Riley Wealth Chief Market Strategist Art Hogan and R360 Managing Partner Barbara Goodstein. Barbara, great to have you here in studio. Talk to me about some of the just opportunities that you see out there or not with gold, with all of these other commodities really pulling back.
So there are opportunities in the market. Every time there's a significant change like there is right now, there are opportunities, and our members are investing behind those opportunities. So they want to keep cash so that they still have their powder dry when things get even better. But right now there are opportunities in energy and opportunities in defense stock, and every member has been holding a portion of their portfolio in gold as well as Bitcoin.
Art, how are you thinking about the courage to deploy some of that cash and where?
Well, I'll tell you this, Taylor. One of the things to think about is that since the start of the war, there's been 2 sectors in the S&P 500 that have actually been in positive territory. One is energy for obvious reasons, and the other is technology. And the reason behind technology is it entered this war at some of the lowest valuations we've seen in 3 years, right? We had that fourth quarter sell-off and first quarter of this year sell-off on AI concerns, disruption concerns, CapEx concerns. So we're seeing very reasonable valuations, but they're also very agnostic to what gas prices are. So the last thing you're going to give up, Taylor, is your iPhone. You'll even give up your Starbucks coffee before you give up your iPhone and everything else we use technology for if we start paying $5 for gas. So I just think that you've got something that's a little more immune to what's going on in the fog of war right now with higher energy prices, and a sector that's as cheap as we've seen it. The other thing to think about is be careful with energy because of how much has been priced into the current prices, right? It's up 30% year to date as a sector. And if we get some resolve and we see some traffic through the Straits of Hormuz, that can collapse and retrace at least half of that move.
I want to talk about some headlines that I'm seeing. The equity markets are just turning positive, by the way. We should know, not the Dow, but the S&P and the NASDAQ. So recouping some losses that we had earlier this morning. Barbara, trying to poke into here in this final hour of trade. We're getting some headlines from Netanyahu, for example, that after 20 days of war, Iran does not anymore have the ability to enrich uranium. And so I think a lot of people right now in this market are questioning, are we getting near the end? And is that the question that we need to answer before the markets can bottom out?
Well, I think the question is also what are the big opportunities regardless of what's happening at the Straits of Hormuz. So there are opportunities in nuclear, and that's not going to go away. There are opportunities related to AI, and those opportunities keep growing. So memory and infrastructure, that's not going to change. So what's happening in this war has an effect all over the place in multiple sectors, but there's still upside opportunity regardless of when this ends. Europe is going to invest in defense and increase defense. So the timing of the end is less important than the new world order and what's happening and what people are looking at.
Art, I want to, I'll put this chart out on social, and it stunned me. Going back since 1939, on average, after big wars or big conflicts, the S&P 500 on average has bottomed out 12 to 15 trading days after the beginning of the war. That's where we are effectively right now. Do you start to see signs of bottom fishing, of people getting a little bit more confident jumping into these equity markets again as we, for now, slightly just turn positive on the session?
Yeah, I would tell you this. I think that's a really good point. Historically, that's correct. And then 6 and 9 months later, the market is significantly higher, going all the way back to World War I. So those are important things to note. But I think it's also important to look at how elevated the VIX has been for a significant period of time. The fact that there's more stocks that are down than are up in the S&P 500 over that stretch of the 20 days, and just how low sentiment has gotten, whether it's the fear and greed sentiment or the AAII survey that came out at its most bearish than we've seen in the last 5 years. All of that signals that we're getting closer to the bottom here than to the top. And I certainly think that any good news can really spur a rally in a very oversold tape.
Art, specifically, what do you like? Stocks out there.
Yeah, three things I would say. First and foremost, technology, the most oversold, the most immune to what's going on with energy prices in the near term. But I think on a valuation basis, clearly we're really not scratching the surface of what AI is going to look like in terms of a driver, and that's shifting some from GPUs to CPUs, which is important for the memory names. But I would also offer up that the other two sectors I would certainly look at right now on a very valuation basis is financials. Financials are going to be beneficiaries if interest rates start coming back down. They're going to be involved in a lighter regulatory touch. We've already started to see that with yesterday's Basel III announcement, and certainly capital markets pick up as economic activity pick up. So I think the financials are very washed out here. The third I would throw in there is healthcare. Healthcare hasn't been a sector to invest in, and I think now is the time, especially if we start to see M&A activity and large cap pharma starts buying up some of those biotech companies. So those are the three I would focus on as we make this U-turn out of what we're doing now.
Barbara, so Art likes tech, financials, and healthcare. Any of these pique your interest as well?
So we're certainly invested in tech. I would say we were among the first group. This is ultra high net worth investors, and they were among the first to discover AI. They're also looking at defense stocks. They're also looking at hard assets as well as Bitcoin, and we're very high on Bitcoin. We think that Bitcoin has also bottomed out. Bitcoin prior to the midterm elections is down 54%. This is the third time it's been down 54% prior to midterm elections, and then it pops back up. So we think there's a lot of upside there as well.
Interesting. Fascinating conversation with both of you. Thank you so much, Art Hogan and Barbara Goodstein.